Morning, everybody. We're happy here to myself, partner with Noseworthy Chapman, along with two other of the partners of the firm, Denise Coombs, tax partner, and Colleen O'Keefe, audit and insurance partner. We're happy to, make ourselves available today. We have some slides to go over with you, just very high level with respect to the programs that are available. And then from these slides, what we will do is we will, sorry, I'm just trying to get that to move down. We will be open for questions and answers. I think that the best value with this particular forum is to allow individuals to be able to ask the questions where they are having difficulties. We will touch on all of the programs that are in place by the federal government right now, but we are not touching on the programs for individuals. We do have some knowledge of that, obviously, but at this particular point, our focus is businesses, and in focusing on that, we have just the business programs highlighted for everyone. So first up, I'll ask Colleen to talk through the commercial rent program.
Good morning, everyone. Thank you, Dorothy. I hope everyone is faring well through this COVID year, and we're starting to see some light at the end of all of this. As many of you are aware by now, the government programs, many have been extended to give small businesses some additional relief through the summer. In particular, I'm going to speak to the Canada Emergency Commercial Rent Assistance Program. For those of you that are not aware, this was a program available to small businesses, whereby small businesses could avail of rent assistance with their landlord, and the landlord being the applicant. The qualifying criteria had to be that your revenue had to be declined for the months of April, May, and June by 70%. The government has now announced that this program will be extended into July and August. So if there is an impacted tenant who met the April to June revenue decline, you are automatically eligible to be included in the program for July and August. Of course, the onus is still on the property owner to take care of the administration for this extension, but the tenant is not required to meet the revenue test if that's 70% for July and August. Again, you're in already if you have qualified previously. Deadlines are important to note here. If there is a small business that has not yet applied, you have until August 31st, which is only next week. So if you are applying by August 31st, you can apply for the April to August periods by August 31st. If you have already applied for April, May, and June and been approved, you do have till September 14th to go into the portal and reapply for the July and August extension. Also interesting to note under this program, and these are changes, previously the rent assistance that the property owner was granted under the form of a forgivable loan would be reduced by any other relief that you received, either from insurance proceeds or maybe a provincial program that you availed of. This has now been changed, and effective June 30th, the amounts under the CECRA will not be reduced for any other relief that you've received. This is retroactive, so if any landlords, property owners have had their relief reduced for these amounts, you can submit an application to them and they will reimburse you for any amounts you were previously reduced by. And the other new item under this program is a lot of businesses had questions previously. Revenue tests required that you compared rental income and revenues for 2020 to the same month over 2019. A lot of businesses that were newly constructed didn't have the same months in 2019 to do this revenue comparison test too. Right now, they have come out and they've said if you are a new business or a new build, newly constructed, you do have the option to compare your April, May, June revenues to the comparative period January and February 2020. So you can get an average of your January and February 2020 revenue, and that can be your baseline for your comparisons. One other item to note here, related parties, a question that seems to keep coming up. Related parties can qualify under this program, provided that there is a valid lease in place prior to April the 1st. And of course, this lease has to be at market rates. And over to you, Denise.
Had to unmute myself. Sorry about that for a little bit of a delay. Thanks, Colleen. I'm going to speak a little bit today about the CEBA program and some of the other loan programs that are available, loan and guarantee programs that are available. I think the bulk of this presentation is going to be about the wage subsidy, so we're going to save a lot of time for Dorothy. So I'll go through these very quickly. The first one is the Canada Emergency Business Account Program, the CEBA as we call it for short. And basically, this is a loan program that provides an interest-free loan of up to $40,000 to eligible applicants. And if the loan balance is repaid in full before December 31st, 2022, up to 25% of the balance that's outstanding at the end of December 2020 will be forgiven up to a maximum of $10,000. So if you have $40,000 outstanding at the end of December, you will get $10,000 forgiven if you repay completely by December 31st, 2022. If you don't repay completely, it's converted into a term loan with a 5% interest rate on it. So there's definitely incentive there to get it paid off. The loan, you can apply for the loan now. They've changed the requirements since they first announced the program. Now there's basically two streams you can apply for. One is called the payroll stream, and the other is called the non-deferred expense stream. With the payroll stream, basically if you have employment income, which is basically if you look at your T4 summaries for all your payroll accounts for your business and add them up, if your employment income is between $20,000 and $1.5 million for 2019, then you can apply under this stream. And basically you apply through your financial institution because it's the financial institutions that are providing these programs. With the non-deferred expense stream, basically if you have employment income of less than $20,000, you can apply through this stream. However, you must have what's called non-deferred expenses of between $40,000 and $1.5 million. And basically what they're doing with this stream is basically saying if you have the expenses, you've incurred them for January and February, and you're committed under contract to incur those expenses for the period from March onward, then you include those in your 40 to 1.5 million in eligible deferrable expenses. Some of the expenses that are included in that might be wages, rent or lease payments, payments for cell phones, payments for heat and light, property taxes, those types of expenses. I'm not going to go into all the details of how you apply for the loan, just in the essence of time, but just wanted to highlight that they have expanded the criteria and to make sure that if you are eligible, you get your application in. The next program I'm going to speak about is basically a program that's monitored by the EDC and the BDC. Just give me a second here now. And basically what those programs they come under the umbrella of BCAP, which is basically the Business Credit Availability Program. And those programs, like I said, are monitored by the BDC and EDC, so you apply through those. The BDC loan is basically a co-lending program, and you can get up to a 20-year term loan under that program. The EDC program is a guarantee program whereby they will guarantee new lending for you with minimal insurance premiums that would be required to be paid on that guarantee. So again, these options are available. Just wanted to highlight them in case they've dropped off your radar as something that you might be interested in applying for. Under those programs, you can get up to $6.25 million in funding depending on your revenue stream. So definitely something to keep in mind. And the last one I'm going to speak very briefly about, and I apologize for falling going through these quickly, but based on the questions, I think everybody's interested in what Dorothy has to say. The next one is the Regional Relief and Recovery Fund that's administered by ACOA. We've heard through the grapevine that this funding has been all accounted for in terms of they've had enough applicants to use up the $110 million that was assigned to ACOA and the CBDC to administer these programs. But we've also been told to continue to apply, because if new funding becomes available, you're in the queue, and if you're eligible, well, then you'll be eligible for the additional funding if it comes up. And one last point that's not on the slide is anybody who's involved in scientific research and experimental development. There's been a little, I guess, blip in the glitch in the program for that, and I use the word glitch, I guess, very loosely. The SHRED program, basically, you have up to 18 months after the end of the year to apply for your credits. And anybody who's involved in the program well knows that. But there had been some talk around extending the deadline for applying for SHRED in light of COVID. And it was included as part of Bill C-20, which did receive royal assent. But that bill basically says that if a minister orders a deferral of the application process for the SHRED credit, then it will be deferred. But there has been no ministerial order. So if you look on the CRA website, they're actually encouraging you to get your claims in on time in case that order never comes through. So I just wanted to highlight that for you, for any of you who may have thought you have an extension to your SHRED filing deadline. And that's it for me. I'm just going to remind you, if you have any questions, to post them in the chat there at the bottom of your screen, and I'll turn it over to Dorothy. Thank you.
Thanks, Denise. I think I'm off mute. Everybody can hear me. Yeah, so I guess it's been a long time since the 15th of March when they originally announced this Canadian Emergency Wage Subsidy program. And if you recall, the original program, which I'm referring to now as CEWS 1.0, because we now have a CEWS 2.0, this program was originally a 12-week program. And in March month, you had to, as an eligible employer, have a decrease in revenue of at least 15%. And then for April and May, your revenue decrease had to be at least 30%. And the fundamental subsidy that was offered at that time was a 75% subsidy of your eligible employees. And that was the maximum weekly benefit was $847 per week. The government announced in May that the extension to the CEWS program and the testing for the period of June, which is period 4, was maintained at the 30%. And at that time, they did put businesses on alert that if they were going to make any changes to the subsidy program, that would start in period 5 and forward. So that was August and July month. So we now know the details, I guess, with respect to what they have announced in this 2.0 CEWS subsidy. And effectively, there are two groupings of periods as an employer that you need to be aware of. The announcement said that the CEWS would be extended to December, but all practical information that they have out only goes to the 21st of November, with the ability to add the month of December on should they wish. The CEWS period for 1 to 4, which is your March to June period, no changes were made to those periods with respect to the 847 or the eligibility. But for periods 5 to 9, they now have substantially changed the subsidy from what it had been. So the subsidy now from periods 5 to 9 are effectively in two parts. A baseline subsidy, which is available to all employers that have experienced a decline in revenue, of any amount of decline in revenue, and then a top-up subsidy, which is an additional 25%. And government has phrased that to be eligible for businesses who have been most severely impacted, and they have defined that severely impacted as having greater than a 50% revenue decline. So I guess just some key points that I want to make sure everyone is aware of when it comes to this second round of CEWS, or the CEWS 2.0, that would be of interest to members that are on the call today, is that effective with the new 2.0 subsidy, basically any eligible employer that has experienced a revenue decline are now eligible for some level of subsidy from the periods 5 to 9. So that's July to the end of November. So you basically don't have to have, and Denise calls this a bright line test. In tax, it's a hard line where you used to have to meet the 30% test. Now it's a graduating subsidy. So it's very much linked to what your revenue decrease that you're experiencing has been. And as well, there's a choice now to use the current period's revenue drop or the previous period's revenue drop. So if individuals remember, in the CEWS 1.0, the government announced that if, for example, you had experienced a 15% revenue drop in March, you automatically qualified for April. So this now carries through for periods 5 to 9. In addition, they have also introduced in this what they refer to as a safe harbor rule. So for July and August, because these announcements didn't actually come out until many employers were through the month of July and into August, what they did for July and August month is they grandfathered in that 30% subsidy rate threshold. So if your revenue dropped at least 30%, the previous subsidy rate of 75% because of the safe harbor rule effectively stays in effect. The baseline remuneration, it was also changed. So if members recall that on the original baselines for periods 1 to 3, the period that you could have as an alternate was remuneration paid from March 1st to May 31st. The default baseline, I believe everybody is aware, is January 1st to March 15th. But they did allow, because different employers were hiring individuals at different times, certainly seasonal employers were impacted. So this period 1 to 3 was now altered, and as well for period 4, they extended into June. So it gave some flexibility with respect to how this baseline is calculated, which at a 75 or other percentage recouping of that salary could have an impact on what individuals would have as subsidy received for their employees. So in previous CEWS 1.0, and there was a lot of discussion of this at the time because there were some issues with the calculator that had been put online that Revenue Canada had to subsequently correct. If individuals were without remuneration for 14 consecutive days, then all pay that was paid to them in an effective eligibility period was excluded from receiving any subsidy. So that now has changed effective with period 5, and individuals can be in a consecutive period of 14 days without remuneration, but the alternate days are still subsidy eligible. So that would be a fundamental change from what others would know if they have been applying through periods 1 to 4. And as well, the automatic qualification, as I said earlier, remains in effect for 5 to 9. So effectively, if you qualified for CEWS in June, irrespective of what your revenue decline is in July, you qualify for the baseline July subsidy, or once again, the grandfathered subsidy if it's at the 30%. So the other thing which was introduced with the CEWS is that you could change your election. So if members recall, in the CEWS calculation, you effectively have a number of choices. The first choice that they had given was whether or not you compared your revenues on a cash or an accrual basis. That choice remains consistent through all 9 periods. So if someone has chosen, for example, the accrual period in period 1 to 4, then they are accrual period for periods 5 to 9. However, what they have allowed some flexibility on is in the comparing period. So the other choice which you had with the initial announcement of CEWS is that you could compare your revenue decrease to either the average of January and February's revenue for 2020 or the same comparable month in 2019. What's fundamentally changed now is that if, for example, you were comparing to the average of January and February for periods 1 to 4, you can now change your election for periods 5 to 9, for example, to be compared to this previous month of 2019. So that, once again, in determining the CEWS that you are able to get for your employees could be a factor for you in maximizing the subsidy available. As I said at the beginning, the CEWS 2.0 really now is 2 subsidies. There is the baseline subsidy, which I discussed, and then there's an additional top-up subsidy of 25%, and you must meet a revenue decline in excess of 50% to meet that, and you have to do the comparison of the revenue decline in a preceding 3-month average. So that's another, I guess, additional complexity which they have added to the CEWS 2.0. As Denise said, there are some extensions that have been made to the program. And so once again, with the CEWS subsidy, now that they have introduced periods 5 to 9, they've extended the final application deadline as of right now to January 31st, 2021. And I guess where we have, in talking to clients and discussing this, the new CEWS 2.0 definitely provides more opportunities for businesses to qualify for the CEWS because of any revenue decline. Now you are eligible, certainly for the baseline, but I think we would all concur that because of these 2 new levels of subsidies and the mathematics behind it, that they have become much more complex in the design and calculation. On the CRA website, they do have the various periods laid out in a, I'll say relatively easy to read a chart so that you can see what the maximum weekly subsidy benefits would be under each of the new periods. And as I said, the CEWS 1.0, the maximum subsidy was $847. Now with a 50% decline in revenue, it's up to $677, and exceeding 50%, there is the additional CEWS top-up, which effectively will be graduated based on how much your revenue has declined over the 70%. So the CEWS 2.0 subsidy right now, if you had not qualified in periods 1 to 4, I think what's important for individuals to realize is that there is a subsidy now if they've experienced a revenue decline that's available to them, and that the maximum combined subsidy for any individual that has, exceeded the 50% revenue drop, instead of being $847, is now $960 in period 5 and period 6. The government does reduce that through periods 7, 8, and 9. The online calculator is available, and I guess I find in trying to explain some of this CEWS subsidy calculation to individuals, an example really helps with that. So if using an example of an employer who had experienced a revenue decline of 75% in July, and they had revenue drop of 70 or more for April, May, and June, and they're continuing to pay to that maximum weekly salary amount, effectively under the new CEWS 2.0, that employer would have received a subsidy of 75%, but now they will receive actually a subsidy at 85%. Because of the new combining of the baseline subsidy and the top-up subsidy. For the safe harbor rules, once again, when you're looking at an employer as an example that have experienced a revenue decline in June of 30%, they will automatically qualify in period 5 July for a subsidy. And because of the safe harbor rules, they are now eligible to receive the 75%, which is the maximum eligible subsidy under CEWS 1.0. Although if you look at the calculator, if, for example, in June they had not experienced that level of revenue decline, then in July they would have only received a 36% subsidy. So there is, once again, the grandfathering rules and the rules to allow individuals to be able to avail of these subsidies in period 5 and 6 does require some additional effort on individuals' parts to try and maximize that subsidy. And then there are some, I guess, furloughed employee examples. So they, beginning in period 7, basically you'd follow the new CEWS rates for your furloughed employees. Once again, 5 and 6 is being grandfathered, but individuals are cautioned to be aware of if they have individuals that are home and not working, but they're still continuing to pay, that there is some differences beginning in period 7 with how those individuals are treated for subsidy purposes. We have found that the resources that CRA have online in the FAQs give a lot of examples, and they are, you know, there is some mathematics in those, and it helps frame up your questions. The 1-800 number that CRA has put online, we've had some good experience with agents being able to answer questions that we have posed to them when we have some ambiguous situations. So I certainly would encourage that, you know, that you look at that resource that the government has available as well. One of the things which I guess I've noted is that I have been since, I guess, gosh, it was March or April now, the Federal Minister of Business, Minister Ng, has held it started in March as a daily conference call with various individuals across the country, and now it's gone to Mondays, Wednesdays, and Fridays. And I guess as guidance for individuals of what on those calls I'm hearing is that their CRA are very in tune with individuals maintaining consistency with how they are applying their revenue tests. They are keenly aware of looking at any, I guess, manipulation that's happening there. So I guess as a guiding factor, what I would tell individuals and what they have said, the head of CRA Audit and Compliance has participated in a number of those calls. And what they are saying is to keep your documentation. They are fully aware that the rules are changing on a very dynamic basis, and that individuals may have interpreted something when they did an original application that, you know, further FAQs may have said that that was an error. They have provided now on the websites mechanisms for being able to correct that error. And I think it's an extremely important thing for individuals to maintain that documentation if in the event of the audit, so that you can demonstrate best efforts when you are actually calculating and applying for any of these benefits. And administratively, certainly on the calls, they have said that they would look to those factors should it be determined that someone did make an error in their calculations. So I guess as guidance, we would tell you to keep your documentation in place, and that's very important. And then I put on there also the CEWS application. So what individuals will note is that on the website now, when you are applying for the CEWS, there's actually 2 application forms. The first one covering period 1 to 4, which was a calculator that assisted you with being able to calculate the amounts per employees. That calculator has now been updated for periods 5 to 9, and anyone who has been in and looking at the calculator will notice that there are significant changes to that calculator, in that there is a new tab that has been added where your revenue amounts have to be indicated on that calculator for it to properly calculate in period 5 or 6 whether you receive the safe harbor rule grandfathered 75%, or if you are subject to either the reduced rate or the accelerated 85% rate. So the calculator unfortunately has gotten more complex as they have made the rules more complex, but and the attestations have some additional attestations that you have to do that were not there in periods 1 to 4. So I guess that's a very, very high level overview of the CEWS program.